Good morning. Welcome to Stock Market Today. It's Monday, February 24th, 2020. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com /today. Sign up for a free email where you get a lot of the content for this show, as well as daily stock ideas for you to consider. It hits your inbox every trading day before the market opens. So I hope everybody had a great weekend. But now we're going to dive right in. First off, Friday's trading, U.S. equities finished lower with the major averages closing down on the week. Coronavirus outbreak and flash PMIs were the key reasons for the weakness on the day. REITs and consumer staples outperformed, while tech and consumer discretionary led to the downside. Treasuries were stronger, with the curve flattening. The 30-year bond yield traded near a record low. The dollar was weaker on the major crosses. Gold was up 1.8%, its highest level in 7 years. WTI crude ended down 90 basis points on the day. So your outperformers, REITs, staples, and healthcare, all finishing higher on the day. Your underperformers, tech, discretionary, adcom services, and energy to that list as well. And as we get to the desk this morning, futures are under pressure, down 2.5% plus after U.S. equities came under pressure last week. Stocks are on track for their first three-day losing streak since early December. Asian equities were lower overnight, led by South Korea and Australia. European markets are down as well, with Italy one of the worst performers as that has become a center for coronavirus fears. Treasuries are rallying across the curve. The dollar is weaker versus the yen, but stronger against the euro and sterling. Gold is adding on, up 2%, and WTI crude is down about 3.5% as we get going on a Monday morning. So taking a look at the structure of the S&P 500 here, futures trading pushes the index into the support zone. Remember, we've been highlighting 3250 to 3300 as a support zone. That is now being tested. The lower end of it is being tested in pre-market trading here this morning. So it's still holding in the near term as support, but then below that, we have to start thinking about 3,000 to 3,100 as the next real area of support. It's interesting to me, through the Chaikin framework, our overbought, oversold indicators all remain overbought for the major market ETFs. So just something to keep in mind. Remember, we look for support to hold and oversold conditions. Well, we're not there yet. The RSI is in bullish ranges, but that divergence is still in play. We'll see how the RSI shakes out throughout trading here today. Chaikin money flow also bullish, but also putting in a series of lower highs. So some divergences is in play as well as the market was making new highs last week. Now, remember, we've been saying that with the market overbought, with these divergences in play, it makes sense to become more selective. As a matter of fact, we even said, there's no rule that says you have to trade. And as always, keep an eye on a strict risk management process and discipline. Let's turn to our market in a minute. What are we writing about today? Well, stocks fall as coronavirus fears spread, while flash PMIs disappoint. SPY does remain overbought as support is being tested in the futures market this morning. Gold and treasuries rally in a flight to safety. Crude oil is likely to see renewed pressure, and it is under pressure here this morning. We'll take a look at that chart a little later in the show. And as I said, futures do point to a lower open here today. So with Friday's weakness, the Dow is down about 80 basis points, 8 to 5 bulls to bears as we check the major indices from a power bar perspective. S&P 500 lost a little over 1%, 136 to 67 bulls to bears there. NASDAQ was an underperformer as tech and semis came under pressure, 31 to 6 bulls to bears. Small caps inline performer to the downside, 466 to 274 bulls to bears on that metric. Big rally in bonds sending yields lower. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. The major markets are mixed. And as I said, the major market ETFs all remain overbought. So I think we want to give this some time to play out. Obviously under pressure here this morning. We prefer to wait for oversold conditions using our proprietary overbought, oversold indicator. Now, taking a look at our stock of the day, auto-generated based on the power gauge rating, and it's Johnson Controls, which is kind of interesting because the rating is just turning very bullish due to very positive expert activity and attractive financial metrics. Earnings and technicals are middle of the road, but 20 factors, 5 in each of these 4 categories, give us this very bullish rating for a stock that is above the rising long-term trend line and in a strong industry group. Building products have been strong. Now, from a setup standpoint, however, we are still lagging the market. Now, the intensity of underperformance has been diminishing of late, but it is still a laggard. At the same time, we're overbought rather, with mixed money flow. And with the markets under pressure here this morning, I really don't see a need to go out there and buy a stock like Johnson Controls. We can add it to a bullish watch list. We can see if the relative strength continues to improve and if we can work off this overbought condition. However, I'm not excited about putting new money to work here today, given what's going on in the futures market, given the fact that the markets here, whether we're looking at the Qs, the SPY, the IWM, they all remain overbought based on our proprietary metric as near-term support is being tested here this morning. Continue to build watch lists for open positions. Continue to focus on your risk management process. Let's hit our sector tracker now. Moving to the major sectors over the last 5 days. Only one group higher over the past 5 days of trading, and that's your REITs. After that, utilities and staples are down marginally, but if you look at the top three from a relative perspective, this is very defensive positioning here. REITs, utilities, staples, those are your defensive areas of the market. And we look down at materials, healthcare, energy, and discretionary, and middle of the road, all down. Industrials coming under pressure. Obviously, coronavirus fears playing out there. Financials, lower yields are a headwind to the financials, and that has been the case for the past couple of weeks, really since the beginning of the year. Comm services, one of the groups that we like, it is under pressure here as investors are taking some risk off the table. Same goes for technology. Obviously, technology is levered to China in a big way. Keep an eye on the semiconductors, which we're going to look at here in just a moment. The semiconductor services sector is our industry in focus today. And now it has outperformed over the past 6 months. And that's one of the aspects that has kept us within the bullish trend and with a bullish stance on the market. However, its power bar ratio, which measures future potential, is now neutral. 7 bullish stocks for 7 bearish stocks. It's ranked number 13 of 21 subsectors, and it's moved down 1 slot over the past week. So some of the names there that we want to avoid, the stocks with very bearish ratings, are Marvell, MRVL, Silicon Labs, SLAB, and ON Semiconductor, ON. We can see all have very bearish Chaikin power gauge ratings, and we're really going to want to pay attention to semiconductors here. You know the importance that I place on semiconductors. As we take a look at the chart of XSD, now I like to focus on XMH, the semiconductor ETF, SMH rather. XSD is what we're looking at here. It has a bullish ETF power gauge rating, and the trend is still strong as the rising long-term trend line is being tested, right? However, we're overbought. Money flow is diminishing. Now, we are still outperforming, but the intensity of outperformance has been diminishing since the end of January and into February here. And this is what we want to watch closely. We want to watch this relative strength. If this relative strength continues to roll over, we have to start thinking about the market doing the same. Remember, the correlation is between the relative strength of semiconductors and the market itself. When semis are leading and that relative strength is improving, that's a bullish sign, and that has been the case. It's kept us bullish on the market in general. However, relative strength now coming under pressure and likely to come under further pressure here today. We want to watch that relative strength very closely to take our cues for the broader market, which, as I've said numerous times already, remains overbought. Now, taking a look at what's trending, Friday's S&P 500 movers and shakers are gainers and losers. Deere added 7% following their earnings announcement. Gilead up 4%. Didn't see any real news to drive trading there. Mosaic rallied on the back of USDA data, adds nearly 4% on the day. PKG, I didn't see anything company specific to drive that stock higher by 3.26% in a down tape. And Newmont up 2.8%, following through on earnings from earlier in the week. Also caught a rally in gold to send that stock higher on the day. And then today, Newmont, I did notice, caught an upgrade from a sell-side shop. So we'll see if that can follow through. Again, as I said, gold is rallying here today. On the loser side of the board, Hasbro had an investor day on Friday. Stock down 9% on the heels of that event. AMD, coronavirus fears driving the semiconductors lower, driving tech lower. AMD down nearly 7%. Devon Energy following through on the downside following their earnings announcement. Schwab under pressure with the announcement of Morgan Stanley agreeing to buy E-Trade. Schwab down nearly 5%, and NVIDIA coming under pressure with the semiconductors. Right, semis were under pressure. We really want to pay close attention to the semiconductors here in the days ahead. In particular, that relative strength for the group. If semiconductors continue to underperform, you have to look for the market to remain under pressure. If semis stabilize and begin to move higher on a relative basis, we can start to look for support levels to hold in the broader market. But right now, I think it makes sense to give this some time to play out. Now, let's dive in to the charts. It's Monday. We look at macro themes and trends across asset classes to help inform our view on relative performance at the equity level. Now, we looked at this chart on Friday. We're going to look at it again today because the 10-year yield is under pressure. Flight to safety is driving investors into Treasuries, which is driving the price of Treasuries higher and the yield lower. Taking a look at the TNX, the CBOE 10-year U.S. Treasury Yield Index, right, tried to rally through the fourth quarter, but really since the beginning of the year, we've been under pressure. We've been in this consolidation between 1.5 and call it 2%. But we are below the 50-day moving average. We are below the 200-day moving average, and support was tested on Friday, and it's being broken here this morning. 10-year yield down around 1.4% in pre-market trading as treasuries are bid. Notice the RSI for the yield moving into bearish ranges. Notice that on the rally throughout the fourth quarter, it never became overbought. Quickly gave up bullish ranges, now oversold back in early February. Rallies have not been able to break the RSI out of bearish ranges, signaling that we are likely to see a move lower in yields, and that is playing out here this morning as key support is breaking. What does that mean for the equity markets? Well, obviously, we would expect financials to remain under relative pressure. We would expect our bond proxies, REITs, and utilities to be outperformers, at least on a relative basis in the near term. Now, that could simply mean they go down less than the broader market, but nonetheless, that would be outperformance, and we're taking our cues on sector rotation and positioning, largely from what we're seeing across asset classes. Remember, on Friday, we looked at that copper to gold ratio continues to move lower, yields continuing to move lower with it. At the same time, a flight to safety has caused a breakout in gold on both an absolute and relative basis. Now, in my notes on Monday mornings, we've been highlighting gold. We've highlighted the consolidation, saying that it was likely to resolve to the upside, and that has been the case. And it continues to be the case here this morning. Taking a look at gold, we broke through resistance at the call at 1550, 5060 level, right? Consolidated a bit and now have begun to move higher. Notice that over the past year, the RSI has not been able to become oversold, routinely becomes overbought where it currently stands. So there's a momentum confirmation to the strength that we're seeing in gold as investors move into a flight to safety as coronavirus fears spread. On a relative basis, check out gold relative to the broader market, right? We've been in a downtrend on a relative basis, but that downtrend now appears to be resolving to the upside. We've drawn the trend line here, downtrend since last August, broken to the upside here on Friday, likely to continue to the upside today as gold is up over 2% here in pre-market trading. And then finally, we're likely to see oil fade from resistance. WTI crude broke down from the consolidation and then swiftly snapped back. Now we are above the breakdown level, but below this rising trend line, and the RSI is holding in bearish ranges. Now crude oil is down over 3.5% here this morning, right? So we're likely to see this support level break, likely to see these lows around $50 retested. What does that mean for energy stocks? Right? XLE is testing support. Wouldn't be surprised to see that support break here. We've been bearish on energy. We remain bearish on energy. Despite the near-term rally, the fundamentals have not come back for energy. Remains an area of the market that we want to avoid. Now, you can get all of my writing every day. If you sign up for a test drive, a 14-day trial of Chaikin Analytics, head over to chaikinanalytics.com/test drive. I will be back here with you tomorrow.